right, welcome everybody. We hit 10 o'clock my time, so we'll get started. Welcome to everyone who just joined. Hope you're all doing well. Give us a quick hello in the chat. We've got Erica here. We'll just wait till she's ready. All right, excellent. Good. It didn't take too long, so well done. That's technology is always fun, isn't it?
It is. For some reason, my Zoom doesn't work on one computer. I can't figure it out. Deleted it, reinstalled it, and everything for this meeting. Still didn't work.
Oh well, we got it sorted. We're all good now. So yeah, how have you been? It's been a couple of months since we last spoke. So yeah, what's been happening in your world?
Yeah, I mean, just trading this crazy market, been traveling a bit. My father-in-law sort of had some health news, so we went over to the United Kingdom to visit him. That's when the market really crashed, was in the middle of that.
Isn't that
And
always the way? Whenever you go on
it's
vacation or you're traveling, yeah, it always happens.
It's always, and then my phone wasn't really set up to do like get Wi-Fi. And so I was like, wow, how is this happening? So I ended up fixing the phone, but yeah, it was interesting. It's always the worst timing, right? When things like that happen. You just want to
Yeah,
not focus on it. And of course,
100%. It
of
always
course,
happens. Yeah, it
the
happened to me
market doesn't love
once
it.
years ago. I went to Cuba and didn't have any internet access at all, and the market was tanking. It was like, oh, it was horrible. Ruined the whole
May-
weekend.
Maybe it's not always the worst thing because you maybe don't overreact,
That's
or
true.
if, potentially.
Yep.
I don't know.
Yep.
I always try to look at the bright side. How about you? What have you been up to?
Yeah, same. It's just been a pretty crazy market. Things seem to be settling down a little bit now, which is good. But yeah, I'm
Yeah.
not sure what the rest of the year holds. I'm still a little concerned. Anytime we're below a 200-day moving average, I tend to be a little bit cautious.
Yeah.
And the market's in backwardation as well. I don't know if you follow sort of VIX term structure, but that's a little bit of a warning sign for me as well. And even though we've rallied a little bit, we're still in backwardation. So a little bit of I'd like to see that flip before being convinced on this latest rally.
Yeah. Yeah. No, I agree. I feel like the next bullish time period that we could look for is consistent, like for big opportunities are probably July, but then we got to sleep for August and September. And then who knows about October, and then it's like off to the races again, probably at the end of the year for the like normal seasonal patterns. But everything seems amplified. Everything seems
Mm,
more dramatic than it would normally be.
yeah. Yeah, it's a very difficult market because it's so headline driven. It's,
Hmm.
things can change dramatically from one day to the next. And, the technicals maybe don't matter quite as much at the moment. And it's all about the headlines. So, yeah, it's a very, very difficult market.
Yep, news-driven cycles, which
Yeah.
is really it's just difficult, and it's difficult for a lot of reasons, but if you had spent a lot of time like doing your technical analysis and stuff like this and doing charting, there's some chartists that I really follow and I respect what they do. I personally do not know how to make a chart. I don't know how to predict where it's going to go, but I will subscribe to their discords just to be like, could I learn something here? I don't think I've learned anything. In the 3 months I've been following. But what I have noticed is that a lot of the people that are these chartists that I really admire and are seasoned and have 30 years of experience, things like that, they've given up halfway through the day and just posted about like nobody knows where this is headed. It could go up, it could go down. And I'm like, okay, so that's why I kind of like what I do because I don't rely on charts. I just make sure every
Mm,
trade has a backup trade.
yeah.
And that seems to be getting me through this. I'm also sort of comforted by the fact that I think every bear market or every market like this teaches you a lot. So there's a lot to learn, and if you use it as a learning experience, it's a better education than any like bull easy market will give
Mm,
you.
yeah.
Um, so there's always that. I'm the eternal optimist, you can see.
Yeah. No, that's good. So just taking a quick step back, just for some
Yeah.
of the people here that might not know who you are and weren't on the
Mhm.
last interview, just can you give us a bit of background on your experience and your trading history?
Yeah, sure. So I'm a self-taught options trader. When I say I'm self-taught, it was just me who decided that I wanted to learn it. So I went out and I took courses, did seminars, all that sort of stuff for about 3 years. But I had been options trading before that, just with like covered calls. I never
Hmm.
really did the cash secured put. I just did covered calls. That's when I fell in love with it. And I sort of started fantasizing about oh, if I could get my account to be a certain size, I could make 30K a month and then I could just not have any other job. I could be work optional.
Hmm.
And I sort of figured that amount was supposed to be like 1.5 million.
Yeah.
That's what my math was leading me to. Um, but I was just like, okay, now the catch is I got to get the 1.5 million. Then I kind of got more, I guess frustrated with that idea and just wanted it sooner. So that's when I really started studying options because I knew that there were other ways to make money with other strategies. I just didn't know them. And I didn't, when I did this, I sort of went out to learn them in like a way that would fit my lifestyle and what I wanted. And the lifestyle that I wanted for the future was that I wasn't going to trade too much time for the money. I didn't want stuff that was going to be so risky, was going to keep me up at night or anything like that. I just wanted to enjoy my life and sort of find out if there was an option strategies I could add to the covered call that would kind of get me more income, more
Hmm.
premium income, but not add any more real stress to my life. And so that's what I did. And I kind of came up with after 3 years that there were just a number of trades that kind of got me there. And so I pretty much just stick to those. And that's what I do. And occasionally I'll start studying another trade and I'll study it for I'm studying straddles right now and I'm like going like, okay. I like out of the box thinking too. So I'm trying to figure out if there's a way around the trade to kind of do it differently. That's usually where most of my mindset comes in or what I tend to think about when I'm analyzing whether I want to add a trade into the system. But that's pretty much what I do. So now I make my primary income from trading, and then I mentor other people on options with a program where I teach the same trades. So that's pretty much about me.
Yeah. And what are the other trades? Obviously, you mentioned covered calls, cash secured puts. I know you do sort of diagonals with what I would call
Hmm.
a poor man's covered call. What other sort of
Yep.
strategies are you doing?
Yeah, so I love the diagonal, which is the poor man's covered call. I also have a variation of it that I call the rich woman's covered call.
Nice.
And then I don't love the cash secured put, and I don't really love the wheel. I love the idea of the wheel that you get paid to go into the position of owning the shares, but I get to into that position more through the bear call spread. That's going to sound so odd to people. But basically this trades that I do are the covered call bear call spread. So that's a call credit spread. I prefer the put credit spread to the cash secured put because I do like the downside
Hmm.
protection.
Yeah.
And I think everyone for the last like 2 years has been like, why are you doing that? Why are you doing that? You could get more premium. And what just happened is exactly why did it that way. With the huge market fall off. I do trade a lot of leaps when the market's right for it, but it's not right now. So those are too risky, like you said. Like there's other things coming into play. So those are the basic trades. Yeah. So cover
Cool.
call, put credit spread, some call credit spreads, the diagonal spread, and then leaps. Yeah.
Nice. So have you stuck to the same process through this drawdown, or have you started flipping to add some more bearish trades than you would normally do, or is it still pretty much,
Yeah.
yeah?
Yeah, I think there's a time and a place for everything. So, at a time like this, I do set up bear call spreads on those up days because I'm with you. I don't really feel that we can get too much more momentum out of this market, like going up really quickly. So I do love the bear call spread right now. I'm not really putting any bear call spreads up on stocks this week because we're in the middle of the Mag 7 earnings. So
Hmm.
I stay
Yeah.
away from like risky time periods. So to your point about like, does the formula change? Yes, it does, just depending on what's going on. But my favorite trade right now would still be the bear call spread. I am always making covered calls and I'm always just working my diagonal spreads. So it's interesting too because I feel like when people say share your trades with us, share your trades with us, I'm like, well, what do you want to do? Just see me roll out all the time? Because I feel like that's what I'm doing. 90% of the trades that I do, I feel like is just managing positions that are already open
Yeah.
and rolling and rolling and rolling. So there's really no magic there. It's just, I don't know,
Yeah,
you
I think
know.
definitely when the market's volatile like this, it does become more about managing existing positions rather than opening new ones. I kind of have been, yeah, the same the last couple of weeks.
Hmm.
How do you pick which stocks and ETFs that you trade? Do you have a universe of stocks, or is it just kind of case by case basis? Do you stick to the highly liquid stuff, or is there like a filter in
Yeah.
terms of option, how much volume there is in the options?
I just stick to probably a core 5 to 6 stocks that I always trade, and I will move out of those if they stop giving me what I need from them. So like right now, those stocks are Amazon, Nvidia. I'm becoming less of a fan of Nvidia. We can come back to that right in a minute, but I trade Costco, I trade Apple. So to bring up like what I was just to talk more about what I was just saying about stocks, they don't give you what you need. I might move into another one. So I have a stock watch list that I'm watching, every day, a few times a week, just seeing what different stocks are doing, like Google, it could be anything really. But most of the time it's got to be a mega cap or a monopoly or the industry dominator for me to be interested in it. So like Home Depot is a stock in the United States that I will watch. I haven't been trading it very long, but in the past I did. But to tell you more about like when something sort of like doesn't work for me anymore, like Apple didn't work for me. I think it was 2 years ago. It was just stuck in a range and all the volatility was like gone from the stock for 6 months.
Mm,
So
yep.
the premium just wasn't there. And I was like, this isn't really working for me anymore. So I had to move out of Apple for a while. And then, it was right after they announced stock buybacks, which was in May 2024 when that stock started to move again. And I started noticing it was moving. And then I moved back into that with some of my NVIDIA positions because NVIDIA started being stuck. So I think it's like there's a willingness on my part to move to greener pastures all the time. Like I'm just
Yep.
not so involved in a stock that I'll just trade it until it ends up hurting me,
Yeah,
I
makes
guess.
sense. Makes sense. Yeah. And do you have a maximum number of positions that you'll have on at any one time? Like if you're only trading five or six underlyings, you sounds like you don't have too many positions, but some of them might be quite big. Is that a fair assumption?
Uh, I don't know. I don't think I have a lot of positions that are open because I'll run many trades on the same stock. So I would, for example, if the market were a little bit more steady than it is right now, I would, put credit spreads on a down day and then wait till I felt like we got to high point and put up a bear call spread there
Gotcha.
and
Yeah.
then like close out. So I feel like there's always stuff moving back and forth. And then, like for example, on Nvidia, I might have I think I have 12 diagonal spreads going on there, but they all like the leaps, most of them have different expiration dates because I will buy them at dips in the stock
Yeah.
and then at different points in time. So yeah, there's a lot open. Like if you ask me how
Gotcha.
many,
Yeah.
I
Yeah.
don't know, I didn't even know, like
Yeah. Yeah. Okay.
dozens and dozens open. Yeah.
And you're managing each position individually rather than the stock as a whole, or do you kind of look at
Yes, I
things on the
manage them
whole
individually.
individually? Yeah.
So my thing is like I almost always trade on a Monday, Wednesday, and Friday. So I wake up in the morning and I see what the on Monday I know that there's going to be trades I got to do because I had stuff expiring on Friday if it did, or cash coming back into the account that cover calls that get called away. So that's always like a big day. And then from there, I will just modify whatever is happening because I'm not trading that many stocks, like honestly, probably 12 max, because I'll trade 5 to 6 religiously and then I'll dabble in a few others, just have maybe one diagonal spread going or something like that on another stock. And so I'll just alter those. On Tuesday, I don't do anything unless there's a big change in the Dow. Like if the Dow moves 400 points either direction, I'm going to log in and take advantage of that. Otherwise, I'm probably not doing anything.
Yeah.
On Wednesday, I'll kind of come back in, modify some things again because more theta has changed. Thursday, if nothing changes in the Dow, I'm not doing anything. And then Friday is a big alteration day as well, or a new day to open positions. So the only exception to those rules are if I do set up a stock alarm on my phone, if there's a position I want to get in or I know I need to modify if the stock goes down or up to a price. So if those alarms go off, I'll log in and see what's going on and see if I have to react to that. So that kind of keeps me away from the computer most of the day.
Yeah, that's a
Stocks.
really good process idea. Do something similar. So obviously, the time difference for me is a challenge. So yeah, have alerts and things like that that keep me informed on
What
what's
time
going
does the
on.
market? What time does the market open for you?
Oh, it's tough at the moment. It's like 11:30 p.m. till 6 a.m. This is the worst time of
Oh,
year.
man.
Yeah, our summer's not too bad. It's more like 1:30 till 8 a.m. So I can, easily catch the last few hours. But yeah, usually try to do more of the open at the moment this time of year. But yeah, I definitely
Wow.
prefer summer, our time. Your winter is much easier. So yeah, part of the
Gosh,
challenge of being over here.
this is quite a lifestyle choice you've made.
Yeah, that's right. I don't sleep. I don't sleep much.
Wow. So do you sleep a lot in the daytime then?
Sometimes I will. Yeah, yeah, for sure. Yeah, catch up,
Sometimes.
have a little nap at times when I need it. So yeah,
Wow, you sound superhuman. I need a lot of sleep. I can't relate.
yeah, for sure. Um, all right. Another question. You mentioned theta earlier. Do you
Yeah.
have are you monitoring that pretty constantly? Do you have like a sort of theta amount that you're looking for, and if it drops below, then you're trying to sell some more premium, or is it just sort of more out of interest and just something you keep a cursory eye on?
No, not it's a cursory eye on it.
Yeah.
Like I don't even have any options that are expiring this Friday, I noticed when I logged in this morning. Everything is expiring the next week. So normally, my Monday really might involve looking at those options that are expiring at the weekend and making some adjustments then on the Monday. But like this week there weren't any, so I was like, what am I gonna do in here? And found some other things to do. But no, it's more just like there are some positions that, like this morning I bought a leap. I extended a leap. I rolled a leap that I owned out for more time because I really liked the way that it was behaving and I was using it for a diagonal and I liked the premium I was getting back from it. So I just used what was remaining of the time period in that leaps contract, which it probably wasn't a leaps anymore by the
Yeah.
time I rolled it, but it had started as leaps. So it's one of those things where I was like, hey, there's 3 months left of this, and the theta's going to run out really quick now. So I should take advantage of how much money remains in it to use it as a credit to buy something else. So it's kind of like that sort of thing. I don't have like really strict rules with that. I just kind of go with my gut for the most part.
Yeah. Okay. There's a question here from um, an attendee on
Mhm.
European, Asian, South American markets. I think I'm going to know the answer to this, but I'm assuming you just trade US and you're not really looking at.
I do. I just
Yeah.
trade US. Yeah.
Yeah. And a follow-up question, slightly different topic, but what's your typical dates to expiration and delta on your credit spreads? I
Mhm.
guess your diagonals are a bit different because you're using leaps, but a typical credit spread, are you doing, weekly, monthly, 45 days?
Yep. 3 weeks to a month, definitely on those. I
Yeah.
hardly ever go longer than that. I hardly ever go shorter than that either. And I don't really so much rely on the delta as much as I sell those on an up day or when I feel like things are just going to decline rapidly. So, an example of rapid decline would be on Mag 7 stocks right after earnings in July, then all the traders go on vacation. So it's sort of like everything tops out in July on those Mag 7s. And then they just like shoom, swoosh down because nothing happens in August. So I will just set those up like crazy at that point in time. That's like a really easy example. It's harder to trade other times of the year, to be honest. That's a really good example of one. So I don't really look for delta. I just look for up days or when I know the stock is going to go down. So I'm not trading credit spreads like till I'm blue in the face either. I just think that there's like good times for them. I think this is one of those good times. And so, there's a lot of time periods where I'm just not opening up bear call spreads for 2 months in a row because it's just there's better trades to set up for
Hmm.
that time period.
Okay. I'm kind of curious with your credit spreads, like how do you choose a strike price if you're not using delta or using like the
Oh
charts
yeah, I
or?
just will go. I look at the good question. So I am looking. So these 5 to 6 stocks that I trade, I just know what range they're trading in. So I mean, everything is out of its range right now because everything has gone down so much. But I will pick like for a while, Amazon was trading in a range of the a 165 to 168. Oh, sorry, 165 to 185. That's what I meant to say. So there were
Yeah.
so many days when Amazon would just pop to 185 and I would sell like the 195 and buy like the 210. And I would set up that as a credit spread. And it was just like taking candy from a baby. That lasted for about 3.5 months where I was just doing that. Like every time Amazon went up and then every single time it went down to like 178, I would close it out. And it was magical. It kept working and working and working. So a market like this, what's so frustrating about it is all of that sort of range has just been wiped out. So the low-hanging fruit isn't there anymore, which is what's so frustrating about it. So how would I do that now? I would do something like what I've noticed is that these stocks can swing, Amazon can now swing $8 to $12 in a day or two. So now I'm going like, okay, if it's an up day for that stock, what I'm going to do is I'm going to sell the lower strike to be about $15 up the options chain. And then I'm going to buy further up than that to create a credit. That makes sense to do it. Because if the credit isn't like $125, I'm probably not going to set it up because I feel like the risk isn't significant, it's not a good risk to pay rate ratio. But that's how I look at it. So that's how I would do it. I hope that's not too complicated, but that's how I do it.
Yeah. So I guess to some extent you are doing a bit of technical analysis, really, but just
Yeah.
slightly differently. Yeah, to some others. So no, all good. Um, what advice would you give to someone who's just starting out?
Ooh, for now, I would say go really slow.
Yeah.
Go really slow. I think that, I think I'm not a big fan of paper trading, but I do think now is a time when paper trading is intelligent to
hmm
do. I do. I think that you should still have some money in the market because I just think you make different decisions when your money is in the market. But I wouldn't say like if you're new to this, oh my gosh, I wouldn't throw everything in there, that's for sure. Um, but yeah, starting out new, I mean, it's tough because I think a lot of people don't necessarily want to buy shares right now to even start a covered call, and I feel like that might be a mistake because I don't feel like we're in a terrible range to buy currently. Um, so there's that, but I would start out just really slow, and I would trade paper because I actually think some of the safest trades to do right now are sort of more some of those more advanced trades like that have multiple legs to them. So maybe paper trading makes a lot of sense right now while you can do that and just practice and get kind of good at it. The other thing that I would say to everyone too is that if you are starting now, it there's going to be so much more easy times ahead of
Mm,
you
yeah, very true.
that if you can do it now, you can do it anytime. You can
Yeah,
do so much better in the future. So don't let yourself get discouraged right now. It is going to be fairly discouraging, but the education you're getting, um, is one that like I don't think anybody got for like from 2009 through whenever that bull market ended. Like that was just insane. So it used to be really easy to trade for a long time, and then we had the 2022 and this year. So we've gotten a scrunched period of really intense stuff thrown at us, and 2020 as well.
yeah, yeah. 2020 was rough with the COVID drop. That was pretty
Mhm.
insane, but yeah, definitely one of the more difficult markets that I can remember in recent years at the moment. So yeah, if you can survive this, you can pretty much survive anything.
Right, right. And that's another thing that I'm sort of again consoled by. Like I hate seeing the fact that like maybe used to have like 50 or 60K months and now I'm like kind of down to 30K months and I'm like, "Oh man, this hurts." Right? But at the same time, I can still make a lot of money. So what am I complaining about? But one of the things that I do is I go back to those time periods and especially in 2022 when I was like, okay, I'm really gonna like try new things and trade this market and not be scared of it. I made 75% of what I made the year before, which I was like blown away by at the end of the year. And I'm thinking, if this is about as bad as it gets, then I can do this. I can quit my job and do this. Um, so you will come out of it, stronger if you take it seriously. If you go and hide, I think that's also a mistake. So if there are people who are just like, I'm not going to trade anything at all because I could lose money. Well, I mean, do you want to get good at it or not? Do you only want to trade bull markets? Because that's okay if that's what you want to do, but you'll probably never be able to be work optional from options in that case. Um, Unless you can sock enough on way on the good years to pay for the bad.
Yeah, yeah. Oh, cool. Well, yeah, I haven't got too many more questions. So, yeah, really appreciate you coming on today and sharing your time with us. I'll see if anyone's got any questions if they want to type it into the chat here before we finish up. But yeah, just once again, want to say thanks for coming on and sharing your knowledge and experience with us.
Yeah, thank you for having me. And so, Gavin, what are some of the trades that are working for you right now?
Yeah, uh, similar to you, bear call spreads. I've
Uh-huh.
actually been doing a couple of debit spreads as well, which I don't normally do because a lot of
Mm-hmm.
the credit spreads I do around the 15 delta, they have sort of, might have 100, reward versus 900, 850 risk. So the
Okay.
reward to risk is normally a bit skewed. So at the moment, because the direction's so hard to predict,
Mm-hmm.
doing more almost the opposite, where I'm doing a debit spread, risking 150 to potentially make 850, where that way, if I'm wrong, I'm not going to lose much. Whereas, as you know, if a credit spread goes against you badly, the losses can get pretty big pretty quick. Uh,
Mm-hmm.
and then, yeah, just the usual sort of wheel trades, you know, taking ownership of stocks I want to hold for the long term, selling covered calls where I can, and then just some hedge trades as well.
Mm. This is Jason saying, what are your thoughts on non-directional trades? It's funny. That's why I'm studying straddles currently to try because it says, hey, you can do these in a non-directional way. So I'm trying to figure those out right now, Jason, actually studying up big time on those. But would that also be something like an iron condor, I wonder, in your book, Gavin, do you think?
Yeah,
Non-directional
yeah,
gain.
yeah, I would think
Um,
so.
yeah, I mean, those seem those seem tough, but let me just throw this out there. If you are setting up like an iron condor, why do that? Why not just sell a put credit spread on a down day, wait for an up day, sell the bear
Yeah,
call spreads on the other side, and then you're still effectively getting the same amount of premium, but you're being smarter about it. I like that more because I can react to what the market's doing rather than like trying to um double time spreads. He's saying something about more than trying to like predict the way the stock is going. For me, like I'm the first to admit that I will say I don't know which way stocks are going on a daily basis. I have no idea, but I just know that the stocks that I pick are going up over a 5 to 10 year period of time. And if they're not, I'm going to move along to something else. So that's
yeah,
the only thing I'm confident about.
yeah,
Um,
and that's we're
so
picking good quality companies is really step number one, right?
yeah, double calendars and diagonals can be pretty versatile. Yes, they are. So yeah, I mean the non-directional ones, I try to just trade up days and down days. I really stay
Hmm.
away from trying to figure out if something's going to be the same. And like I said, when things stay the same, I don't even come in and trade. I'm just
Yeah,
like, oh, things are the same. I have nothing to do.
yeah, yeah, exactly. Yeah, I mean, further to the comments here, like I double, not necessarily double calendars and diagonals, but I do like the calendars and diagonals at the moment as well
Yes.
because of the term structure of volatility. So we've got really high short-term volatility and lower longer-term volatility. So that's really great when you're doing time spreads. So yeah,
Yeah,
so
I
that's
mean,
that's gonna
one
be
of the
good for your
things
diagonals, right?
it's great for the diagonals. So what I'm doing with my diagonals is I'm waiting for an up day. Like say Amazon is at that one, it's back to that 185. It's their high day. That went away last fall. It's back.
Yeah.
Yeah, it gets in that high day, that 185. I'll sell like a weekly. I'm selling more weeklies
Mm,
now
yeah.
ever before. So I used to be the 3 week girl. Now I'm the weekly girl. And I'm selling those weeklies on an update. And then the stock goes down on one of those days. The Dow goes down 400 points, which is happening like twice a week now,
Yeah.
which is crazy. And then I just close it out 2 days later. And it's just like, boom, So I'm kind of, I don't always have something going on my diagonals. That's what has changed for me about the diagonals. I'm waiting for those up days selling, waiting for it to drop and then closing, and then just waiting for it to go up again and doing the same
Mm.
thing over and over. And that's how I'm taking advantage of that volatility.
Yeah, for sure. I
Um,
mean, you're getting so much premium on those weeklies with the volatility being so high, and then as soon as you get a drop, you're winning because the stock's dropping, and then you're getting the theta as well. So it's a
yeah, it's great.
double bonus. Yep.
But when the market first fell, I was like, what the hell am I going to do? Because you just get so confused. It's like overwhelming, right? And then, 2 weeks into it, I was like, hey, this isn't so bad. This is
Yeah.
actually kind of awesome.
Yeah. Volatility's
So,
double-edged sword, right? It's good and bad.
mhm. It's great if you're selling, bad if you're buying.
Yeah. Exactly.
Really all we have to say about that. Do you hedge your diagonals on the downside? Like, what would be an example of that? I'm wondering, what does he
So
mean?
do you buy any puts or anything like that to
Oh,
to
yeah.
protect the downside? Yeah.
Um, yeah, so I do buy puts. I'm not a big fan of buying puts. I should probably be better about it. I don't buy puts. Well, I sell put spreads,
Mm.
but or set them up, but I have since this market fall off bought more like long puts that I'm selling puts against because I'm like, okay, I need to play more to both sides of this.
Hmm.
Um, so that has kind of become more of what I'm doing. When I'm getting premium in, I'm using some of the premium that I'm getting in to buy more of those puts. The thing is with the quality companies, the thing that was so great about the diagonal spreads that were the classic leaps, poor men covered calls, was that you were always counting on these companies going up over a 3, 5 year period of time. And most of my leaps are 3 years long. So you'd get the upside of the leap, and then you'd also get to sell calls against it. And when you buy a put, like on some of these strong companies, what you're doing is actually just going against your overall thesis. And it helps for insurance, right? But it's one of those things where it doesn't pay off as often as you'd like in a
Yeah.
way.
Yeah. It does end up being
So,
a drag. There's some good literature out there on
mhm.
that as well that it might help on some rare occasions like we've seen recently, but in the long run, it actually is a drag on performance. And the puts that people are buying, those out of the money puts, are generally overpriced. And yeah,
Right. I do not trade cash settles. I don't trade SPX. Nope, I don't. I know people that do and do very well with it, but that's not me. And most people that I know that trade SPX are doing the zero DTEs. And it's just like,
yeah,
that seems way too stressful for me.
yeah,
I'm sort of
same.
like way more relaxed and chilled and like, don't, I could have a kid call home sick and I gotta go off and I can't go off and pick him up. I can't have my portfolio explode when I'm not paying attention. So,
Yeah. Oh, very good. Excellent questions, everyone. And thanks, Erica, for answering those.
you're welcome.
We might leave it there. I'm sure you got things to do.
I
But yeah,
do.
once
I have to
again,
take my kid to basketball practice,
oh,
but
there
thank
you
you so
go.
much.
Yeah, thanks so much for coming on. Really appreciate it. And yeah, best of luck for the rest of the year. And maybe we'll get you on in a couple of months
Yeah.
and we'll see how those
Yeah,
strangles are
let's do
going.
it again in like 3 months and see where we are coming into September or something like that. Could be interesting. See where we
Yeah,
are with the market and
yeah,
discuss.
exactly.
Either we're licking our wounds then or we're celebrating. We'll see.
Yeah, exactly.
Okay. All
All
right.
right.
Thanks, Kevin.
Thanks. Take care.
Good night.